What's going on, guys? Today I'm going to show you how you can trade the market with the Fibonacci tool and how you can profit with it. So let's get right into it so you can learn how to make money with the Fibonacci tool and become financially free and do whatever you want with your life. Let's go! So for this Fibonacci strategy, we want to look for a bullish market, and this time we want to buy the market once it pulls back and reaches a specific area of the Fibonacci area so that we can go along with the trend and be buyers this time. So we start on the 1 hour chart. Now here in front of me is the Kiwi Japanese yen, and we see here the market pushed a little bit to the upside. We formed higher highs, higher lows. Here the highest point, then suddenly the market moved to the side. We had here a resistance area which was previously retested a couple of times, and here some kind of a support area. We saw here the first breakout, kind of a retest, then formed this bullish kind of flag or this wedge to the downside. Saw here again a breakout, came for the retest and broke this structure right here. So the market here started to continue to the upside once we had this break after this consolidation pattern where we moved to the side and retested the support and resistance area. If you don't know how to trade support and resistance, here's the video that I made about it. I will link it up here or here. Don't know exactly where it will pop up in the video, but basically here we saw the break above the resistance area, came for the retest. So from here on we can expect the market to move higher. Of course it can always continue and suddenly break to the downside, but here we had the break above the bullish line of this bullish flag and then the market continue. So from here on we can expect the market to go to the upside. So it looks like this. Once you're trading live, the market goes, you see here the pop. So market here probably will continue to the upside. But here suddenly we had the break above this area. So now we know the market is bullish, at least for now. And if you want to make 100% sure that we have a bullish trend, we simply here, you can take the EMA cross 50-200 or the 20-50-200. For now I will take this one. And we can see here we had the bullish cross, market went to the upside, and here we saw a consolidation pattern. So we had a couple of crosses to the up and downside since the market didn't push higher. But here then we had the new push where we had the bullish cross to the upside, and the market didn't break to the downside to form a bearish cross as it did here or here. And then we saw here a support area at the 200 EMA and the market pushed higher. So we can identify that the 50 EMA, which here in my case is the orange-red kind of line, is above the blue line, which is here the 200 EMA. So for now we can here identify the market is bullish. So now that we have confirmed on the 1 hour chart that the market is bullish, we now want to go to the 50-minute chart to continue our confirmation and to find buying entries. And we see here again on the 50-minute chart the 200 EMA and the 50 EMA cross to the upside and continue to the upside, which here was the break of this area. We saw the retest and the continuation. Here we came back to the retest of the 200 EMA. So this is our confluence number one. We want the market to come back to the 200 EMA on the 50-minute chart to see a retest at this area, which as well here is the highest point. And you see the market came right back to it, which is the 200 EMA. So this is our confluence number one and our confirmation number one that we want to see for this strategy. So we take our Fib retracement tool, we take the lowest wick, and then we move it to the highest wick right around here. And what we see here, the previous resistance area, which now here at the 200 EMA is acting as a resistance area, is the blue area on our Fibonacci retracement tool, and this is what we want. We always want the fib or the market to come back to the blue line of the fib area, which here is the 0.786 area. So roughly, most of the times, not always, but the market comes perfectly back to the middle area of the blue area. So right here, if we have here the top and here the bottom, the market most of the times comes back to the middle line somewhere around here. Sometimes it can go a little bit further to the downside and reach this area, or maybe even a little bit higher, but usually it reaches here, this middle area. And I want it to be in this area, the blue box, which is here the 0.78 area. This is where I want my fib retracement to be. So now, once I have my confluence number 1, which is the 200 EMA, and my confluence number 2, the 0.786 blue Fibonacci retracement place, which is here, I take a trend line and I draw it from here to here. And now what I can expect is that here a trend line will be formed, so I will need a third touch somewhere around here. So after the market reaches here and we go to the upside, I want to see a pullback so the market can form a trend line, and this is what happened exactly here. Now we can draw a little bit of a trend area, which would then look something like this. So we have a little bit of more points for the market to pull back. So this is where I want the market to pull back once it goes to the upside after reaching this area. And then I have my trend line with 1, 2, 3 strikes, which is around this area. And now for the entry we go to an even smaller time frame. So now we switch to the 5-minute chart. And we saw here a couple of green wicks that pushed to the upside. Then the market broke above and came back to retest this area where we had a couple of green bullish candlesticks, but at the same time we had some red ones as well. So I want the market to come back to this wicks. Here we have 1, 2, but in this case on the 5-minute chart I can't 100% find the entry that I'm interested in, so I go even lower, and now we take the 3-minute chart. On the 3-minute chart, this was the structure on the 5-minute chart that looks pretty similar on the 3-minute chart, which is here where we had a couple of green bullish candlesticks, pretty big ones, but red ones as well. But what we see here, the market going to the upside here, coming back to this area to form our trend line and our third touch, which is roughly around here. So now I'm looking for entries on the 3-minute chart, and what I see here at the third touch of my trend line is suddenly the market here had this green bullish candlestick breaking this structure right around here. Market went to the upside, and so basically what I want to see after this breakout candlestick is a pullback. So here happened the first one, and here the second one, and so the market pulled here back to the trend line and at the same time to this green wick. So basically my entry would be either the first pullback, which would be this one right here, or since here we saw another pullback which also aligned here with the trend line, my entry would be here with a tight stop loss. So the entry point would be this candlestick. My stop loss would be slightly, maybe this week, it always depends. Sometimes it could be this area, sometimes this week, sometimes straight at this week or slightly below. It really depends on what I see, what the market does. But for now we can make it a little bit more secure and maybe even put a stop loss here. But I think this here, since here's my third touch trend line, I don't want my third touch trend line to be broken, because once my third trend line touch is broken, probability is that the market will go much further to the downside. So my third touch would be here, and I would take this candlestick since here it was kind of an engulfing one, and it took out all the previous candlesticks. So my stop loss would be here around this area, and my target would be the previous high, which would be around here. So here I have a risk reward for 1 to 7, and we can see the market moved up like 1 to 20, maybe even 25. But initially my first target is always a 1 to 2. After that I'm targeting previous structures. So 1 to 2 would be this area, which would in this case be the first structure of support and resistance. So here we had a support area, the market bounced from this area, here we just break through, here it acted as a resistance area, here as well. So this would be my first target, which here would be 1 to 2. Second target here, this area right here, which would be 1 to 3.5. Then maybe this area, depending on the move, the market might here just break through and then target here this area. We can take this one as a take profit as well. So the take profit number 3 would here be a 1 to 5.56, and here the 7. And then if I see the market breaks this last point, then I just will let it run until I see a bearish sign. But for now we just target the previous high, which would be here. So this was today's video with the Fib retracement tool or Fibonacci retracement tool, and hope you guys liked it. So see you in the next video, and thanks for watching.